everyone. Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending February 24th, 2023. Let's get into stocks. All the major indices were down last week with concerns of persistent inflation, which was supposed to be transitory. It's very, very sticky. It's not coming down as quickly as they wanted to. So the S&P 500 declined 2.66. The Russell was down 2.86, and the NASDAQ was down 3.31. Now, overseas, the developed markets, which was the EFA, was down 2.41%, while the emerging markets dropped 2.74%. Energy and materials were the best performing sectors in the U.S., while consumer discretionary and the communication services were the laggards. Now, with fixed income, interest rates rose while bond prices fell after a government inflation report was higher than expected. No surprise there. Yields on shorter-term treasuries rose faster than yields on longer-term bonds, with the spread between the 2-year and the 10-year government issues widening to 83 basis points. The 2-year Treasury yield ended the week at 4.78%, up 18 basis points. Looking at commodities, with rising inflation came a stronger U.S. dollar, which impacted the price of precious metals, which are traded in U.S. dollars. The spot price for gold, which is a precious metal holding, declined 1.68% to a 2-month low of $1,820 per troy ounce, while silver, also part of our holdings, dropped 4.05 to $21.09 per ounce last week. Now, economic data, the January personal consumption expenditures report showed a stronger than expected increase in prices, a sign that the Federal Reserve could continue its aggressive rate hike and monetary tightening to combat inflation. The core personal consumption expenditures price index accelerated 0.6% in January and was up 4.7% from a year ago. Including volatile food and energy components, headline inflation increased 0.6% and 5.4% respectively. And that's the one thing that we're always talking about with how we're going to get inflation down. By raising the interest rates is really the only way that they're going to get it down. They actually want to throw us into the recession, which that's the only way to curb inflation, because it's going to slow down the spending. So let's, don't be surprised if that happens, is what we're going at. Personal income increased 0.6% in January versus December, and consumer spending increased 1.8% during that time, with the personal savings rate rising to 4.7%. Now, much of the boost in personal income and personal savings was driven by 8.7% Social Security cost of living adjustment and higher compensation. Also, credit card debt highlights to a degree with spending is being supported by borrowing money. So all the spending going on, there was a lot of money in banks. There's still a lot of cash on the table, but we're seeing that personal debt is on the rise, and they're using credit cards more than ever. So let's get into some company news. NVIDIA, which is a core selected G33 holding, reported quarterly revenue and earnings that exceeded expectations, and strong growth was spread across gaming, professional visualization, and automotive designs. Guidance for current quarter results was stronger than expectations. Now, shares on this semiconductor manufacturer rose 8.87% for the week. And Palo Alto Network, which is a core selected G33 holding, announced quarterly earnings that far exceeded analysts' expectations on a slight revenue beat. And management of this cybersecurity firm also guided this year's results higher than consensus, and the report was assuring for the progress of its transformation of services to the cloud. And shares were up 10.25% for the week. And then we've got Southwest Energy, which is a G33 holding, delivered quarterly revenue and earnings that were in line with expectations, and investors were encouraged by the management's plan to restrain capital spending in the first part of this year with plans for sequential growth. Shares of this natural gas producer rose 11.87% for the week. And that's it for this week. Thank you so much for being part of the ARA family. If you'd like to get a hold of us, definitely give us a call at 855-756-5700. Visit us online at aradvisorsinc.com, and make sure you visit our YouTube and Facebook pages. And if you have anybody who needs our newsletter, please feel free to reach out. God bless you. Take care. We'll see you next week.